Hello, my name is Tim Enneking. I'm the Managing Director of Digital Capital Management. Today I would like to discuss with you why it's worthwhile to invest in digital assets, or cryptocurrencies as some people say. The target audience for this discussion is not crypto aficionados or crypto fanatics. It's the average investor, the average fiat or non-crypto investor. Why should you invest your money in cryptocurrencies? And there are really two answers, and they're not specific to cryptocurrencies. They're really answers that are related to good investing, good investment policies, good investment principles. And the reason I can address those is because I have another job, if you will. I'm the asset manager to a medium-sized Southern California multi-generational trust and family office. That family office does not invest in crypto at all. And I've been doing similar activities for about a quarter century. So I very much have 1 foot in the crypto space and at least 1 foot left in the fiat space. And so what do investors look for? Any investors, not just crypto investors. They look for two things: diversification, real diversification, and yield. Let's talk about diversification. What do I mean when I emphasize real diversification? People think they're diversified if they have a whole bunch of different investments. But that's not really true. If the behavior of those investments is correlated, in other words, if they go, one goes up, the other goes up, or if they're completely inversely correlated, so one goes up, the other one goes down, that's in the first case, it's not diversification at all. In the second case, if it's truly inversely correlated, so a correlation of -1, it's probably too extreme. What you want is a basket of uncorrelated assets so that they're all living their own lives, and at any given time you have some winners and some losers. Overall, it's mathematically proven that gives you the best investment results with a reasonable amount of risk. So why should you invest from that perspective in cryptocurrencies, in digital assets? The reason is very simple. Cryptocurrencies or digital assets are the least correlated asset class in the world today. There's nothing even close to them. Correlating with every asset class out there, there is never a correlation, even over a short period of time, of 0.2, and usually it's less than 0.1. Correlations, as you probably know, go from 1, where it's perfectly positively correlated, so the assets move in lockstep, to -1, where they move in lockstep in the opposite direction. 0 is no correlation, and there is no asset class that is closer to 0. So it not only gives you diversification, it gives you the holy grail, which is non-correlated diversification. So as a Forbes article quoted me a couple of months ago, you're an idiot if you don't invest in cryptocurrencies, but you're an idiot if you invest too much in cryptocurrencies. And again, that's basic diversification. If you put too many of your assets in a single asset class, or like a single stock, or everything in US equities, you're not diversified enough. So you want to have a reasonable amount invested in every asset class. In the case of cryptocurrencies, because they're quite risky, I would recommend 1 or 2% of any portfolio. If you really love it, maybe you go up to 5. Pardon me, but you don't need to put more than that in this kind of asset class. Over time that may grow, but right now, put in a little bit. Every portfolio should have a presence in the cryptocurrency space, but not too much. Start out moderately. The second reason to invest in cryptocurrencies, again, or digital assets, is yield. Obviously, we're investing to make money. No one invests not to lose money, much less to lose money. So you want there to be appreciation in your asset. There is literally no asset class over the last decade that has had more appreciation than cryptocurrencies. Will it continue at that pace? Highly unlikely. Will cryptocurrencies continue to significantly outpace other kinds of assets? Absolutely. I've actually had a family office that put 2% of their portfolio in my fund. It grew to 8% of the portfolio, and very apologetically, the asset manager came back to me and said, "Hey, look, your performance has been fantastic, but I have to cut it back. But I'm only going to cut it back to 4." And I said, "Look, why don't you just cut it back to 2 again? You don't want to have too much in a single asset class." And he finally decided to cut it back to 3, which is probably a little bit more than he should have had in it at the time, but his decision and with full awareness of the facts. The yield was so good, it outperformed all other assets in his portfolio to such a degree that it had a 4x increase within his portfolio. A good problem to have. The Sharpe ratio of crypto assets is actually not that good, mainly because of the volatility. But with a buy and hold or even a dollar cost averaging strategy, which you'll hear no one talk about in the crypto space, but it does make sense, it's an excellent way to stage into the crypto space, add a wonderful aspect of diversification to your portfolio, and have a tremendous possibility for greater yield. Thank you.